Hi everyone, welcome to Values. So today we're looking at Cango, and these guys are out of the game. Like back in April, I did a video on this company, and they paid a dividend of $1 at the time, and that was pretty crazy. And they're doing it again. So this year, they're paying in total $2 so far in dividends, which is crazy, right? Especially when you look at that share price, and it's $2.26. We go back to April. This share price was around $2.40, $2.50, $2.60, also around that area. And in the run up to that dividend, people kind of like boost the stock up to over $3. And that's very likely that this could happen again. As you see in the pre-market, the stock is up 20%. People see what happened last time. They're buying back in again because they know this dividend is good. Like if we go to dividend history, basically they were paying much less in the past. 2019 they paid 25 cents, 2020 they paid 25 cents, 2021 they paid $1 for that whole year, and then basically this year they declared in April the 26th that they would pay $1 and a recording date. So anyone that held the stock on the 25th or before, on 25th, basically if you held it, basically anyone that was holding it on the 25th would be entitled to a dividend, which is pretty cool. And now we've got a very, very similar situation of another dividends being announced. So as we actually go to this announcement here, that Cango, a leading automotive transaction service platform in China, today announced that its board of directors has approved and declared a special dividend of 50 cents per ordinary share, or $1 per American depository share. And that's to be paid in November the 23rd. So there we go, folks. You have basically another dollar in for the stock. So you kind of have this part where you go like, okay, it's a Chinese stock. Do we trust it or not? But we kind of trust the cash, right? And the cash is legitimately being paid out. If we look at the balance sheet, so okay, we'll go through the second quarter. Second quarter business was pretty average. They had $43 million US for the second quarter. But if we go to the net loss was $42.7 million. Though if we minus some of the non-cash expenses, they lost $28 million. So, overall, they're running quite an average business that's losing money. Hopefully, it continues to grow and actually do good. The one thing that they have going for them, and I want you to look at the market value of the stock, it is $330 million. And the amount of cash these guys hold, cash and cash equivalents, is $191 million. And then they've got short-term investments of $315 million. So add that together, that's over $500 million. And if we go to the non-current asset, that they've got restricted cash of $137 million. So overall, they've got in excess of $600 million, which is nearly double what their market value is. So hence why this huge payout in dividends, because they have so much cash on hand that they can do this. If we were to do the math and we go $1 over that $2.26 for anyone that was lucky enough to buy at that pricing, that's a 44-cent dividend. And if we were to do it at this new pricing at $2.64 to go, is that still worth buying into? That's a 37% dividend. So, if you think that, hey, these guys are, they are holding a lot of cash, and you don't actually see them kind of going, their current business losing all that cash for them, and that they will continue to pay out huge dividends, it's actually worth holding some of the stock, because the dividend's that good that if they paid another dollar, that would be pretty amazing, right? That, hey, you just have to hold it for the long, like this year, next year, and if next year they pay out another $2 in dividends, imagine that just pays out everything, and you're just you have no risks holding that stock after that. But of course, that's a lot of assuming, and I think you just do it based on how you feel about the stock. But anyone that brought at the start of April, and then continued to hold onto the stock, and then got basically the first dollar, and now they're getting the second dollar, $2 of dividends in 1 year for a stock that's just trading in the mid $2. That's pretty good, right? That nearly pays for the stock itself, and it just takes away so much of the risk. The fact that they've actually paid this out before means it's actually not as crazy as it kind of sounds. It does sound quite crazy because you're not used to dividends being so high. You're usually quite used to it being like 3-4% of that share price, whereas this is like 44% on this last closing share price, and the pre-market you're looking at about 37% dividends, which is pretty extraordinary, right? So yeah, there's just no words to really describe the massive dividend that you can get from the stock. But of course, the risk is they're running an average business that's losing quite a lot of money. Though, if we were to look at their other performance, like annually, last year they were actually okay. They kind of broke even. So even though they're losing, they still probably have some graphs of the business, and they're not actually burning as much as we think they are. So yeah, you look at whether you think it's worth the risk, but I thought it was definitely very interesting that these guys are paying another dollar. This reaffirms some confidence in the stock, because usually you buy into a stock and you don't know if it's actually good, particularly if it's a foreign stock, particularly if it's a Chinese company where they've had some accounting issues. You have regulators coming in and going, we might be delisting Chinese stocks as well. So hence why you've got always these constant kind of threats, potential risks that kind of make holding stock a bit risky. But at the rate that they're paying the money back, that's not bad. That is seriously not too bad. Hence why the pre-market is going pretty crazy for it at 15% up. But of course, dividend won't be paid until November, which is basically just over a month away. So basically, yeah. So if we look at this, anyone that holds the stock on October the 24th will be recorded, and then they will be paid in November. So basically, in less than 2 weeks' time, they will be looking at who owns the stock, and then you'll be paid $1. The thing is, they recorded that, and actually, I think some people actually even held onto the stock onto the record date, and then the next day on basically they just sold the stock, and then they still got dividend, and they got the stock, and they actually sold it at a really, really good price as well. So potentially, if the price actually holds up quite well, you actually get more than $1, because you get $1 for a dividend, and you get anything that you gain on top with that share price increase, assuming you time your selling right and the share price is actually quite high at the time. But yeah, like, again, at the first time I saw it, it was quite unbelievable. Seeing it the second time, it's less surprising, but still pretty extraordinary and much more believable as well. So yeah, that's one of those things. It's like, is it too good to be true? Apparently not, because if you look at the history, it's on its side. That hey, in April they already paid, recorded, and in May they paid $1 out, and now they're saying this month they're going to record, and next month they're going to pay another $1 out. So that's some pretty extraordinary stuff. Let me know if you've got any questions or comments. Post below. Until then, good luck investing, everyone.